All right, we are live. Happy Sunday, familia. I don't got my 40 today. I got the Fiji plastic bottle. I don't know why I'm taking this off. All right, where are my people? We are live. I know, Rocket, that's what I'm saying. Janet, where are you? You're usually the first one to put a comment. I have a special treat for you guys. You know how I'm always trying to provide value. So just waiting for some more people to come on. Put in the comments if you are ready. Happy Sunday, everyone. Rocket is a part of the live today. Hi, Theo. Hi, Arlene. Happy Sunday, guys. Today was a chill day for me. Oh my goodness. I stood in bed almost all day. Hi, John. I was working for a little bit and then I was just watching shows. I took a day, it wasn't a full day off, but for the most part it was. Come on, if you're on and you're excited to speak to a lender, great time to ask questions without pulling your credit. Definitely let us know that you are here in the comments. Hi, Edwin. Edwin asks, do you think no real estate tax for seniors will happen? I don't know. I don't know. I know that, for Florida, the governor is trying to have no property taxes for everyone, right? I'm not too sure. Give me 1 second. All right, let me just let a few more people come in and then we are going to start. Hi, Anthony. Anthony said, stormy weather here in Maryland this weekend. I have land in Ocala. Should I sell? That's actually a great question. So honestly, it depends. People, the lots are, are definitely, the prices are increasing for lots because builders are wanting to purchase lots to, of course, build, right? I've seen where people have bought land, no lie, in like Marion Oaks for maybe $1,500, and then they're selling it for like $30,000 now, right? Ew. Whoa. Hi, Gilbert. All right. So I have Mike Whitaker on here. He is a lender, and I thought this would be a great time to have him on, right? So I'm going to bring him on right now. All right, I got Mike here. Hey, Mike.
Hey, how's it going?
Good. How are you?
Doing well. Happy to be on this lovely Sunday.
Yes. Did you do anything fun today?
Gym and relax. That's literally it the whole day. So kept
Yes.
it chill.
Oh, I felt that. Like I said earlier, I stayed in bed for most of the day. I've been out all week. So today was just like, nope, I'm not going anywhere. I'm not doing anything.
Got to take a rest every once in a while.
Absolutely. Guys, if you have any lending questions, now is the time. Now is the time to ask because I have Mike on here. Mike, tell us a little bit about yourself.
Yeah. Mike Whitaker with the Whitaker Mortgage Team at HMA. Been in mortgages about 9 years. Connected with Alexis, a few weeks ago,
Hmm?
feels like, and already cultivating a great relationship. And yeah, just happy to help anybody out there that's questions, first-time home buyers, 10th-time home buyers, doesn't matter to me. I want to make sure, everyone's prepared for either their future purchase or refinance when hopefully these rates come down. So yeah, this is exciting, and hopefully got some great questions today.
Yeah, absolutely. How long have you been in the business for so that you could tell everyone?
Yeah, 9 years, and then been with HMA a little over a year. So been a long time. Been very fortunate to get a lot of experience in those 9 years. It felt like 20 years to me, but in a good way though. Just been able to help a lot of people over that time, and excited to help a lot more people. I help veterans, first-time home buyers, people, investors, top to bottom. So there shouldn't be a question that hopefully I can't answer.
Yeah, absolutely. So, a couple of weeks back, I talked heavily about Hometown Heroes because I personally think it's a great program, especially for people who need kind of like that assistance with their down payment, right? And in the market we're at where we could have most if not all of closing costs paid, right? So I think I would love to have you speak on Hometown Heroes, how it can benefit buyers, and just a little bit more about it.
Yeah, and I like to the popular one is the Hometown Heroes, right? That's the exciting one. But I don't want anyone to forget also the Florida Bond program as well. They're both controlled by Florida Housing, and they're very, very similar. So Hometown Heroes was originally enacted to help, first responders, people in public service, to facilitate down payment assistance at a greater level than your traditional Florida bond program that's been around for a very, very long time. So it was great. People loved it. It came out, offered a lot more money, a little bit more flexibility in terms of their income caps. And then I think shortly thereafter, they opened it up to literally anybody who's a first-time home buyer and who works with a Florida-based company. So it opened it up to pretty much most first-time home buyers in the state of Florida. It's a fantastic program. It can add more down payment assistance. It's going to help towards down payment and closing costs. Unfortunately, we don't have funding right now. The recent update from them was that they're waiting on their budget plans. But again, very, very similar is the Florida Bond down payment assistance program, which gives you $10,000 towards it. First-time home buyer does have some income caps, but a great program. And I'm very close to hopefully being a lender on their website too. I'm actually working towards it because I love helping first-time home buyers. So it's a way for, especially if you're a first-time, and when we classify first-time home buyers, haven't owned a home, a primary residence home in the last 3 years, right? That is
home buyer. So let's say if you own the home 15 years ago, right? But you haven't owned the home within the last 3 years. Okay, so tell me, if they own a home and they just sold it, but they've owned the home for the last 15 years, that they're not considered a first-time home buyer, or they
correct. It has to be within the most recent 3 years that you have not had home ownership.
Home. Okay.
Right. So anyone who last owned a home prior to 2022, basically, would be eligible as what we consider a first-time home buyer.
Now tell me, because I know that it's going around that Hometown Heroes is going to have funding started July 1st.
So that's actually wrong. There was a lot of misinformation. I actually put a post out about it last week on my Facebook and my social medias. That was the information that a lot of people heard. Was July 1st. The announcement that came out, and I actually just had it on my phone, was that was wrong, that was misinformation, and that they were waiting on their 2025-2026 budget for state of Florida to be approved before having funding. So unfortunately, the funding date is to be determined at this point.
Okay.
Yes.
Okay. And then this is why I always say, right? Like, because I've been talking about Hometown Heroes since I've heard that it was coming back out, right?
We all were.
Yeah, exactly. But things always change, right? And that's just the real estate industry, that things are constantly changing. And so I'm glad that you're on here and just kind of setting the record straight that it's a TBD, to be determined.
Yeah, but don't be discouraged, because the Florida Bond Down Payment Assistance, it's the exact same. It can almost be the exact same type of program. The only true difference is you can potentially get more money with Hometown Heroes depending on how big your purchase price is, and they have higher household income caps. That's the only two differences. So don't be discouraged. I don't want people to be discouraged. Oh, they don't have funding. I've done a lot of Florida Bond Down Payment Assistance for a lot of people.
So what does it take to qualify for that?
So you need to have a credit score of 640 or above, be considered a first-time home buyer, and there are household income caps depending upon location, county, and the size of the household. You'll have your income caps that will vary from there. They do have some debt-to-income requirements as well, but that's for me to kind of determine, help people out with. That's basically it. If you qualify for an FHA loan, conventional loan, I've done VA loans with down payment assistance, even USDA, all those programs would quantify and going in that, as long as you're a first-time home buyer, credit score 640 or above, and let's just say you're not in a high income category, then you're potentially eligible.
So talk to me a little bit about that, right? Because I've had where people are like, well, technically I have $100,000 in the bank, right? But I want to use down payment assistance, right? How does that work?
You still can. You absolutely still can.
Okay.
You can get
So are they not? So if someone has the money, right? Technically has the money for the down payment, but they want to use the assistance, are they not verifying, or is the lender or underwriting not verifying the money that they have in their bank account?
So funny enough, it doesn't matter how much money you have in your account. You can have $1 million. If you meet those other requirements, so amount of assets is not a disqualifier, to answer your question. Now, if you ever done USDA, that is a disqualifier for USDA, which is a 100% financing program. But no, you don't. You can have $1 million in the bank, and you can decide to use down payment assistance if you meet those other caveats that are required. Funny enough.
Now, is this a forgivable loan, or you have to pay back?
No, not free. So yes, it's deferred with a balloon payment. So you do not have to make monthly payments towards it. The money is only due at any point in time the primary loan is paid off, right? So whether that's a refinance, whether you just pay it off, or whether you sell it, basically that money becomes due in whole. So when I talk to clients, I prep them for that conversation, especially now as we're heading towards an environment, hopefully in the near future, with lower interest rates and the ability to do refinances. So I tell all the clients I've helped with that is, hey, look, we don't want to miss out on the opportunity to refinance. Let's take the next 6 months to a year, or however long it takes, continue saving money if you need some money to help, because we're going to pay that loan off at that point in time. Or not, we'll have to roll that into the new loan, but your loan to values may require some money up front. So yeah, but no payments on a per month basis, and there's no interest on it either. So yeah, I mean, it's a great program. And
so there's no interest on that. So if I borrow $10,000, there's no interest on it?
No, you get $10,000 when you pay it off. If you have to pay it off 10 years later, then it's $10,000 still. There's no interest on it.
So is there an interest rate attached to, okay, if let's say you're going FHA, right? You're going to go for a FHA loan, you need down payment assistance. Is your interest rate going to be higher by using?
Good question. So traditionally in the past, it has not been higher. And I think it's a loaded question in a way, because it depends on what the lender has to offer too, right? So you could have a lender X that may have higher rates than other lenders and be more comparable to your Florida housing rate. Now us here at HMA, yes, the Florida. So pivot back a little bit here. Florida housing, if you use the down payment assistance program, it's their set interest rate, which is available online. So you can go to, it's like eHousing Plus. I can put it in there. I'll try to put it in the chat. But their rates are set by Florida housing, and they will change with rates, but not like quickly. Our rates are going to be less at HMA than they will be at Florida housing, but we're not giving you $10,000, right? So it's weighing the cost of that. Most often, even if a little bit of a higher interest rate is going to be worth getting the $10,000, especially if you're in a situation where it's a necessity, or you don't want to be cash strapped for your purchase. We want all of our clients to have a little money left over in the bank upon being new homeowners, because now you own a home, landlord can't fix it, any problems you have. So yeah, so rates can be a little bit higher.
So rates can be, if you use the down payment assistance program, rates can be a little bit higher. Okay. Yeah. But now, how can you, hold on, because I have some questions here. Hold on.
I can't connect.
Hi, Janet. Hi, Mark. Hi, Margaret. Hey, Whit. Hi, Pamela. Hey, Phil. Whit said, can I use builder credits towards rate buy downs and closing cost and the bond?
No. So Florida housing, their rates are fixed, and that, you can't change it. That is what it is. Now, builder credits, such as towards points buy down, if we're not using down payment assistance, yes, we can take that at HMA and we can buy down the interest rate. But you cannot do that with the down payment assistance programs.
Okay, because with the down payment assistance program, it has already its set interest rate.
It's set.
And so that's why I think, in my opinion, right? But again, I'm not a lender. If you have the money, right? If you have the money and you're not, like, of course, strapped for cash, it may be better not to use the down payment assistance program if you're going to get a lower interest rate and it's going to make a big difference in your monthly payments. Am I wrong for thinking that way?
You're not. And it's a conversation I have with people if they do have the requisite money. So if someone comes up to me and they have 50 grand in their bank account, let's talk about it. Okay, let's weigh, here's your, and again, the money's not free. It is due at some point. So we weigh the costs, we weigh the payment differences, we weigh what the future looks like with refinance and paying it back potentially, and then we decide what works best. But traditionally, pretty much most individuals are using this program because they need it. and they need it to be for maybe homeowners. And I'm glad it exists because it allows for a lot more people to be homeowners and start building that wealth as opposed to continuing to rent and build a landlord's wealth. So
yeah, absolutely. And hi Iris. Phil said, what if you're a trust buying a home? Can you still use down payment assistance? That's actually a good question, Phil.
So yes, you can close in the name of a trust on a home purchase. I don't think there's a restriction with
That's
the
a good question, Phil. Okay,
good question.
that is a really
It's a
good
question. I don't see why it would be an issue, to be completely honest. I have not run into it. I know you can, with a mortgage, you can close in the name of a trust. I don't see why they would have an issue with it. But I can, for next call, get that information.
Yeah,
Let's search it real quick. And good question, though.
Yeah, Phil, good question. Whit said, okay, thank you. Can you do it with Hometown Heroes? Well, no, because Hometown Heroes has its own associated interest rate too.
Same thing.
Yeah.
It's all through Florida Housing Finance Corporation. They control all of that, top to bottom. And you can search, you go to ehousingplus.com. You can see all that information online as well. It's all disclosed. It'll disclose the interest rates, the amount of the assistance, the credit score requirements. It's all public availability.
Yeah, I love that. So, okay, so tell me a little bit about could you use, and maybe because we don't, what I want to ask is, could you use down payment assistance with a new builder? But you know how a lot of the builders, you use their preferred lender, right, in order to take advantage of their current incentives.
Sometimes, yeah.
So I'm wondering if with the bigger builders, if you're able to still use the down payment assistance or the Hometown Heroes and still get closing cost assistance.
Yeah, absolutely. So
right?
Yeah, absolutely. So that the down payment, the closing costs, either whether we negotiate it with a seller, right, which Alexis is great at negotiating. Probably most of her clients, she gets the seller to pay closing costs. You can absolutely do that. And if the builder is offering closing costs, it's the same thing. So that's kind of those aren't directly related, right? Let's look at a down payment as one side. Yeah, down payment as one side, closing costs as another side, right? You can absolutely get both. You can get down payment assistance, and you can get the seller to pay closing costs and or builder in this scenario, and then you do have the potential to get into a home with literally no money out of pocket.
Yeah, I definitely agree. And it's just you just can't take advantage of if they're doing a 4.99 interest rate, right? Because if you're using a down payment assistance, they already have that associated interest rate with it, right?
Correct. So
yeah. And the reason why I talk about Hometown Heroes, right, or down payment assistance program is because I had literally one of my clients we closed last year, and she only had to come to the table with, I think it was like $4. I'm like, really, $4? You guys couldn't just
make it zero?
Couldn't make it zero, really?
I figured it out.
Right. And so I thought that was pretty cool, and especially because a lot of people just don't have it, right? But I think everyone should be a homeowner, and that's why I love these programs that allow people to actually become homeowners, and especially in the market that we're at now, where you could essentially negotiate all of the closing costs, and then you don't have to come to the table with anything, right? You still have to pay most likely for your out-of-pocket stuff like your appraisal or your inspections and things like that.
Yeah, no, absolutely. I've done VA loans with Florida, which is no down payment VA loan. And I've had clients utilize it to cover closing costs in essence. So yeah, absolutely. The funding is there.
I love that.
Especially if you need it. Now, if you have, in the scenario I presented earlier, if you have $1 million in the bank, you probably don't need it. I've had a few clients like that. It's just for people who who deserve it, who want to be homeowners, and yeah, but
just don't have. Belle, can you stop it? Belle's a Karen. My one of my dogs, she's a Karen. I just had where we're working together with one of our clients, and there are you always have to take into consideration, like, although they say we are in a like a mixed market, right? I feel like we're more towards a buyer's market, right? Because you have so much inventory. There's so much for buyers to choose from now, right? And there's a lot of negotiating. However, there are sellers out here who are just like, nope, I'm not. No, I know what I want, but they don't necessarily, like, I feel like those are the people who don't necessarily need to sell, right? So for example, we put in an offer. Mind you, this house has been on the market for over 200 days. And what the seller came back with, because he's been in sale for 25 years, right? That he was only going to give us half of what we were asking for towards closing costs. And my buyers were like, absolutely not. And no wonder why that house has been on the market for over 200 days, because they're not budging, right? But that means that they don't really need to sell.
Or they don't have a great realtor like you. Let's keep it real.
Hold on. Myra said, how quickly can you get the down payment assistance? If one is under contract and they have to give a deposit within 10 days of signing, how quickly could we have the money from Hometown Heroes or a down payment assistance to put the deposit down? Now, that is a good question. So you take it over, Mike.
I like the question. So your earnest money deposit, and the amount of your total down payment are going to be different, right? So your down payment funds and or closing cost funds are due at closing, right? So theoretically, we go under contract today. Let's say we're planning to close July 8th. You have to have your money available by July 8th. Now, with most contracts that are negotiated, the sellers are going to require some sort of earnest money from the buyer side as a little bit of skin in the game. That's not going to be for the amount of your down payment. It's going to be much less, traditionally speaking. Now, especially if we're dealing with a first-time home buyer, and I'll let Alexis speak to this part, it's more than likely we're going to make that initial upfront deposit as low as we possibly can. So what Alexis, when you're in a situation, how do you negotiate it for your clients in terms of deposit?
Yeah, so at the end of the day, I've never seen where a offer was accepted with $0 as earnest money deposit, EMD, right? I haven't, because what the seller wants to see is that you have some skin in the game, right? So it's normally between 1% to 2% of the purchase price that you're putting down as an earnest money deposit. Now, builders have their own required deposit that you have to put down. Sometimes the builders are actually requiring everything up front as a deposit, right? So and everything, what I mean is, if you're doing an FHA loan and you have FHA minimum is 3.5% of the purchase price, right? They are requiring that as a down payment as your earnest money deposit, right? Within, let's just say, 2 days from going under contract. Now, what I have seen is that there's some wiggle room in that as well, because, for example, I literally just had, I was in Citrus Springs yesterday, which, guys, I got to tell you about Citrus Springs. I think Citrus Springs is going to be the new Marion Oaks. When I tell you the prices are less expensive in Citrus Springs, it's a little bit more expensive in Marion Oaks, but Citrus Springs is where Marion Oaks was a few years ago. So you could get so for example, I have clients who are getting a 4-bedroom, 3-bath house for $275,000 on a third of an acre, no HOA, because there's no HOA in Citrus Springs in where I'm talking about. Anyways, the builder required $5,000 earnest money deposit, but my clients, all of their money is in their current house that they're selling, right? So it's kind of like, okay, now it's where we're negotiating. I'm like, listen, what can we do? Because they cannot bring $5,000 to the table. Okay, what can they bring, right? And then that's where we just negotiate, and then we come up with a number, and there you go. So I have seen where we could do less, but I haven't seen where it's $0 or $50, right?
No.
Hold on. See, Kalesa Township, we require cash to close. So you're talking about just the if they're doing a 3.5 FHA WIT. Also, Mike Witt asks, does your company cover appraisal cost or credit them at closing?
Everything's negotiable. Now, ordinarily speaking, it's not something we would just upfront say we cover. Now, with certain clients who are in need of assistance, it can be talked about in terms of negotiating that. But it is one of the costs. And again, if we're using one of these programs in particular, or getting the seller to cover, then at the end of the day, the seller may be covering the appraisal costs as well. So I'd say TBD. Come link up with me, and then we'll have that discussion.
Yes. So, okay. So, for example, how does it take longer to close on the Florida bond?
No, not really. We tend to say with the bond programs in particular, because so with my company, we deal with multiple state bond programs. Florida bond is actually one of the easiest ones, in my opinion, to use. So we can vary easily 30 days. Now, when I'm talking to people, I don't want to do less. At the end of the day, we are finalizing this stuff through Florida Housing. And whenever you're dealing with a third party that I can't have control over, we tend to give a little bit more of a timeline there just to set proper expectations. And then to answer my question previously, when the bond stuff, so we can close in 30 days. That's when the money comes in, and then we fund at closing. But again, it's going to be outside of your deposit.
So, Mike, do you have to be under contract first in order to get the bond, or you can get approved for the bond prior to being under contract?
No, we can approve. When I do my pre-approval with you, I will. Well, I will tell you, you are eligible. You are pre-approved to buy a home, and you are also eligible to check out the boxes for Florida Housing. Now, we can't actually register with them until you're under contract. You have to be under contract for us to register and hold the money that's going to be funded to us.
Got it. Okay. And then I was gonna ask you a question. Hold on, what is that question? It just went by my mind. But Whit said, so Kalesa Township, the builder he works for, Kalesa, right? They require basically the down payment as a deposit. So if you're doing it, 3.5%, and a lot of builders are doing that as well. So all right, Phil said those are eBay houses. Sellers think that they have treasures. I felt that, Phil. Barbara said, hey girl, I got you. Hey Barbara. All right, so that's what I was gonna ask you for. Okay, so what's the maximum amount for the bond? Is it 10,000, you said?
Correct. Max is $10,000. If and when Hometown Heroes is back up and running, they give 5% of your purchase price up to capped at $25,000.
Did they lower that? Because it used to be $35,000.
It was always 25. I think I'm pretty correct. I'll double check, but I'm pretty confident in that.
Hold on. I'm pretty sure it was 35,000. All right, let's check because hold on. 35,000.
Is it 35? Was that wrong?
Borrowers can receive up to 5% of the loan amount, not to exceed 35,000.
I don't know where I'm getting 25 from.
So now,
Okay. That's incorrect.
question: could you, if someone was doing, could you do the down payment assistance with a USDA loan to cover the closing costs, or no?
Yeah, absolutely.
Oh, I didn't know that.
Yep, absolutely.
That's good. But I mean, it would be better if we could just get the seller to pay the closing costs, because then you
Yeah,
don't have interest
you get a
on that.
lower interest rate. So it's
Lower.
same thing with VA too, right? I tell them first and foremost, let's try to negotiate it first because I can get you a lower interest rate, and then you can still have the money to close with and a better rate. So that's the win-win scenario there.
I agree. So, Mike, tell me what the difference between monthly comfort versus loan pre-approval, because I feel a lot of people have a misconception of, I got pre-approved for $500,000. That means I need to spend $500,000. So can you break that down for us?
Yeah. So what you're pre-approved for or up to is what we would, looking at your application, looking at your debt to income ratios, what you'd be eligible to buy. But just because you can buy something doesn't mean because of your personal finances that you should. Just because you can buy that, $90,000 Mercedes doesn't mean you should. Doesn't mean it's going to fit nicely within your budget. But you probably get the approval from lending. So when I work with clients, I have that conversation with them. I kind of ask them, hey, what kind of price point you're looking at, and what are kind of your payment caps? What do you not want to exceed from a payment perspective? And and then kind of working our scenario around that, and also gauging it with the market of prices of homes too. So, because some people's budget, unfortunately, maybe very little, and it makes it harder to find them homes. So then we have a conversation about their debt in total, right? Where can we cut some stuff, out of your monthly expenses to hopefully get you to a comfortable place where you're buying a home you truly want to live in and love. So it's a very nuanced conversation, but just because you can buy something doesn't mean you want to pay for it, in essence, if that makes sense.
Yeah, I love that. And I always tell my clients, and I even say this on video, right? Just because you get approved for $500,000, you may not like how a $500,000 mortgage looks like, right? So at the end of the day, I'm not forceful, I'm not salesy, because I'm not paying your mortgage, right? So I need to make sure that you feel comfortable with the numbers. And I think it's just super important for that. Yeah, Whit says you don't want to be house poor. You got this home and you can't go to the movies, Walmart, get gas, be smart. Absolutely. I 100% agree with that, right? So, Mike, give buyers a realistic view of full monthly picture, right? So what does your monthly payment consist of?
Good question. So first, your principal and interest, right? So the amount of what's being financed that's spread out through 30 years or 360 months, or in some cases, if some clients may want to do a 15-year term, but most of the time, that 30-year, and then on a fixed percentage rate, right? So that's what's called your principal and interest. That's what you're paying back. That's what in totality ends up paying the mortgage balance down and eventually paying it off down the road. You also have a few more items included in that. One is property taxes. So everywhere you live in the USA, you have property taxes. I know there's conversations about getting rid of it. It's highly unlikely, in my opinion. I don't see, but
That'd be nice.
it'd be nice. I don't know what the backup if we're not paying. Anyway, different conversation. But property taxes. So in my county, I'm in a high tax county in Alachua County. So, but other counties much lower. So it's owning a piece of property. You have to pay taxes for that. That is based upon the value of the home you're living in and the value of the land you're living on, computed with the county and how much they assess their taxes and their non-ad valorem taxes to help with wastewater and garbage trucks and all that kind of stuff. Then you have homeowners insurance. So if you live in the state of Florida, You hear homeowners insurance and you probably want to run away, like most of us do. So, but when you have a mortgage, you are required to carry homeowners insurance in case something happens, because we are collateralizing the property, and we want if there's money being lent out on a home, it has to be in good condition and be able to be repaired in case damages happen. And any intelligent homeowner should want to have insurance as well, because you never know what could happen, especially living in a hurricane state. Lastly, and this will depend on the type of loan and the amount of money you're putting down, but you can also have what's called primary mortgage insurance. So that is an insurance to protect the lender, which is in a scenario that you will have mortgage insurance. You'll have it on FHA loans 100% of the time, no matter how much money you put down. And then you'll have it on conventional loans as well. If you're putting less than 20% down, you have mortgage insurance. Now, FHA, it's permanent unless you're putting more money down up front, and then it's like 11 years it'll fall off. Conventional, it can fall off whenever you've met that 80% loan to value threshold. But again, it's an insurance policy to protect the lender from default. And lastly, USDA also has mortgage insurance. It is very, very cheap mortgage insurance. They do carry it. VA does not have mortgage insurance, but VA does have a funding fee unless the veteran is exempt due to receipt of a service-connected disability. So your payment, to answer the total question: principal, interest, property taxes, homeowners insurance, and in some cases, mortgage insurance. That all makes your total payment that you make each and every month.
So it's what people refer to as PITI, right? So tell me a little bit about, because I know that you just mentioned with FHA, right? So even if you put, let's just say 20% down, the mortgage insurance is going to last for the life of the loan.
I think if you're putting 15% or more down, it can then fall off after 11 years on an FHA loan. I will confirm that exact scenario. Otherwise,
yeah, for you to confirm that for me.
Otherwise, yes, if you're putting the traditional 3.5% down, it's permanent. Unless, well, I will, in my opinion, nothing's permanent, right? Because there's always going to be an opportunity to refinance into a conventional loan and then remove it as well. So most FHA clients that I've ever worked with either at one point refinance into conventional, or they end up selling and then the next house is conventional. But FHA is a great loan program. It's very flexible. It's a low down payment option. It's much more flexible than conventional can be. And it's a great avenue for people that maybe have, decent credit to lower credit, not much money saved up. It's a great loan program that I think a lot of us on our first homes especially ended up getting FHA.
Yeah, I have an FHA loan on my house. What is the lowest FHA? What is the lowest credit score that you have seen for FHA?
So the very minimum to be in the game, to play the game, is 580. That gets you. Then technically you're eligible. Doesn't mean you're approved. I have personally done loans in the 580s and 590s, but those are very unique scenarios, and it's really dependent on quite a few factors. Traditionally, if you're below a 640, it does make it a little bit more challenging to get approved. Not impossible, but challenging. Now, there are things such as manual underwriting we can do. But yes, just because you have a credit score below 600 does not mean that you cannot get approved for an FHA loan.
But a lot of the times, is it like, so let's just say, I know that these are loaded questions, right? Because they are going to vary with different files, right? But for the most part, would you say if you had, let's say, a 580 credit score, do you have to have more money in the bank, like reserves?
So yeah, that's what we call, what would help someone who's a 580 get approved is what we call compensating factors. What are things outside of your credit score that are really bolstering your file? Yes, reserves, huge one. Like putting a lot of money down and having reserves, a huge one. A low debt to income, like showing the affordability outside of your payment history, right?
Mm-hmm.
Those can become compensating factors. And I mean, again, this is more of a loaded and nuance to it, but not every 5-digit credit score is equal. They're all different. Some may have a lot of medical bills that they missed, right? That's not treated the same as someone who just missed a ton of payments on credit cards and auto loans and mortgages. But they could both carry almost a similar credit score. So, but yes, having the reserves, the down payment, the low debt to income, showing history of renting over the past 12 to 24 months. If you document that, that also helps bolster your file. So yes, there are things that can help get that 580 score to be approved.
What if somebody missed a whole bunch of student loan payments? Is that treated the same as like like medical, or no, that's treated like a credit card?
It's treated like any other loan.
Any other loan?
Mortgage, correct. Medical collections, unfortunately, they still impact your score, but they are not viewed as the same. Like we can completely, like it still affects the score and how it's underwritten. But in terms of when we're looking at collections as a lender, we don't care anything about medical bills. They're just ignored. Yeah.
So I don't know who needs to hear this, but I just got smacked in the face. So I have student loans that were in deferment, and I did not know that they were out of deferment because the email that I initially had it set up with, that's like an old email type of thing. And so it happened to one of my clients where she didn't get notified that she had her student loan was out of deferment, and she had like maybe 3 or 4 lates on her credit, and they were under contract for a house. And we ended up having to take her off the loan because it just gave her such a negative effect, right? And so that had me thinking, and I was like, oh man, I don't even know what's going on with my student loans. And so I created an account where the student loan is held, and I've been late for quite some time. I think my minimum payment is like $2,500. Oh, yes. And I'm going to take care of that because I'm just like, wait a minute, what? So guys, if you have a student loan and you've had it in deferment, please double check that it is still in deferment, and don't be late on those payments because it's going to affect your credit score, okay? Let my lesson be your blessing. Now, can you explain to our viewers what debt actually matters in a pre-approval? I mean, in an approval.
Okay.
Debt, meaning like, let's say if they have, I don't know, utility bills, right? Can you kind of let them know?
Yes. So anything that would come up on your credit report is the first thing. So you're looking at mortgages, student loans, auto loans, credit cards, timeshares. What else?
Alimony.
Yes. So then there's things outside of your
yeah, because that's not report. Credit, right? Alimony is not credit. Okay.
Yeah. So alimony, child support, those things.
I think those are the major ones,
that
right?
Should be pretty much it, unless there's something like, this is more specific, like on a divorce decree, for example. You have a divorce decree, and all of a sudden the decree says that you're paying the ex's debt, then that can count. Anything that's legal, basically. But yeah, utilities, cell phone, gym membership, groceries, gas, none of that goes towards what we view as is your debt to income. Now, VA is the one unique one that asks about childcare expenses.
Oh.
So yes, VA is a loan program that has been outdated for 50 years. They don't change their guidelines. They have never seen them change a single guideline since I've been in the business. And if you're paying childcare, that counts towards your debt to income.
Wow.
Crazy to me, but
talking about a VA loan, what range have you seen as far as the funding fee?
So You have a first-time use funding fee, which is 2.15%. Again, this is not if you have to pay a funding fee. A subsequent use, so anything after first-time use, is 3.3% of the purchase price. It is financed. It is not out of pocket. So, and that allows for the veterans who have disability to not have a funding fee. So it can be large if you have a large price, subsequent use. So I mean, but it is what it is.
Yeah,
But it can be a lot.
but I like that it could be financed, right? Because sometimes if that had to be out of pocket, that could be a deterrent.
And you can negotiate for the seller to cover the funding fee, pay towards the funding fee.
Okay.
You can negotiate for the seller on VA loans to pay towards the veteran's debts, which is very unique. So there's some things that are just a little funky, a little weird, nuance with the VA. Yeah, they're old guidelines.
Yeah, that is. Gilbert said, what is the range of increase on your monthly payment after your first year when your land and property now get reassessed? He's speaking specifically in accounting, but you're not going to know. He said in Marion Oaks, but you're not going to know that. But
what's the deal with the millage rate is?
Yeah, it's for Marion Oaks is 0.0168.
So 16.8. Okay. So we went $300,000 price?
$300,000. Yeah.
So we're gonna say land taxes, what, $400 a year?
For probably. Land, yeah.
If that.
If that. Give you a number. But when you're getting, okay, so let's break this down though. When you're getting the loan, you guys are already putting that what the taxes are going to be when the house gets reassessed with the land, correct? And that gets escrowed.
No, we do not.
No. Okay.
So we have to qualify the client on the improved tax bill, right? But we collect on the land tax bill. Because at the end of the day, we can choose to collect the improved taxes, but they're going to get that money refunded to them anyway, because they're going to have an overage in escrow on that first bill. So it's pointless. So when I talk to clients, I tell them very, very specifically, I say, please make sure you listen to me and repeat back to me. Next year, when your taxes reassess, your tax bill is going to go up. You need to spend every month leading up to it, put money away into a separate savings account for what your tax bill is going to be, and you're going to pay as a lump sum when the time comes to avoid having a shortage in your escrow account. Now, to answer this Marion Oaks question, based on a $300,000 price, give or take, you're probably seeing an increase over the land tax bill to the improved tax bill. It's about a $3,000 increase, give or take. So,
what do you mean?
For the total tax bill. Right, so say you're buying a Marion Oaks. If your land tax bill is a brand new bill, say it's $400 a year, when that home gets reassessed based on the county millage rate, that tax bill will then go up to $3,400 for the subsequent year with the improved tax bill. So that's what divided by, goodness gracious, 3,000 divided by 12, $250 a month of an increase. So I'll tell the client, hey, look, take $250 a month right now, put it in a separate savings account. When your servicer comes back to you and tells you you have a shortage, give them $3,000 up front. So what's going to happen, you're going to have a shortage, which is going to be spread out from 12 to 36 months. So you guys going to pay back that bill in your payment. So all of a sudden, your payment's going to increase, what would traditionally only be $3,000, you're going to be paying a tax bill as if it was $6,000 to make up the shortage you're having in your escrow account. So that's why I want people to prepare, because all of a sudden you don't want to see that sticker shock with your payment, and your payment has jumped up exponentially. So again, it happens to people. I try to explain it to them and say, don't forget to do this, because you're going to call me one day. If you don't do it, you're going to be freaking out asking what went wrong. It's because your tax bill has gone up and you have a shortage. So
Yeah, I think that's very important because I always talk about in my videos that the first year the tax is going to be extremely low, and then the next year is where your taxes are going to go up. So I always say, let my lesson be your blessing. So when I bought my house 5 years ago, right? We have a CDD here. So my payment was initially, I want to say it was like a little bit over $1,500. And then all of a sudden I got my escrow had a shortage, right?
Mhm.
And that shortage was literally like thousands of dollars. So it was either I pay that shortage, right? Or it gets rolled into my taxes. It gets rolled into the monthly payments. And that would have been just crazy. It would have been like a $2,600 mortgage payment, right? And so Whit was saying a lot of lenders do not do what we just talked about, escrow the potential taxes for the following year. But he says that the lenders that they use at his builder do that. He said, Mike, if my taxes do go up and I get a bonus from work, can I put that bonus in my escrow and my payment goes down?
Yeah. So you can take a lump sum of money and you can give it to the servicer, whoever's holding your mortgage, to apply towards the escrow account to keep it from being a shortage, right? You absolutely can do that. Now, and you can pay your tax bill in advance if you want to. I wouldn't do it. Do you want me to answer his previous question about a 2-1 buy down?
Yeah, I can see that. Yeah. Yeah, Mike, if I was buying a $452,000 home, FHA 3.5% down, credit is 680. I want a 2-1 buy down. What's the lowest you can get year 1 and 2?
Year 1 probably about 4.65, and then year 2 would be 5.65.
And then 5.65. But then okay, so if it's a 2-1 buy down, year 1 is say that again?
4.65. Year 2 would be 5, and that's based on expired pricing from this weekend. But yes, give or take right in that area.
But then what's year 3 to 30? 6.65?
Yeah, correct.
6.65. Okay.
Mhm.
Okay. Yeah. The buy downs have been very popular for the last couple of years. Like 3-2-1 buy down, 2-1 buy down. Myra said, I paid off all my debt so I can save up for an emergency fund and down payment. How will that affect me?
So I can save up for emergency fund and down payment. Pay off all your debt so you can save up for. It should affect you in a great way. So, good question. I think the question is about how it affect the credit score or the credit profile. Yeah. So, there's positive effects here, right? So your debt to income, that becomes less, right? You have less debts going out right now that we have to account for. Now, what I would tell you is before you pay, I would always pay credit cards down or pay them off always without question. Just do it. That's a high interest rate. Paying those down can have a positive impact to your score. Anything outside of credit cards, though, I would wait to at least speak to me first. And, if we're really serious about buying, do a credit app, right? So say it's a car loan and, according to us, you can buy the home with having the car loan. It's comfortable with you. We may not want to pay that off. We want to make sure you maybe have a bigger nest egg in your account. Also, paying installment loans off actually can hurt your credit profile. So paying a mortgage off will drop your credit score. Paying a car loan off will drop your credit score. It's good to have things that are revolving on the credit report showing positive payment history. Don't just pay everything off and not have something you're paying on. Unfortunately, to have good scores, you have to be paying stuff. You have to be in debt to have good credit score. Oddly enough, it's just the way it is.
That's just backwards in this freaking world. But
you got to be in debt to be able to buy a house.
Yeah. No, so it's not necessarily a bad thing, right? It's
not a bad thing, no. But I would always encourage people just to talk first because, say we don't have to do that. And, you can have the extra money saved up to go towards moving expenses or go towards if something breaks when you're inside the home. Just having the nest egg, being prepared for things. I always want to give my opinions and thoughts on the overall big picture so that you're making the best decision for you and your family as you possibly can.
I love that. I love that. Well, thank you so much for taking an hour out of your Sunday to pour into my YouTube fam. We really, really definitely appreciate that. And if you want, drop your information in the comment section, right? And so that they have a way to reach out to you.
Yeah, I'm trying. It won't let me connect. I've been trying to do that for the last.
Let me see. I think I could do it. Hold on.
Fine.
Let me see.
Yeah, can you drop my phone number and maybe my?
I'll do the blink is fine.
Yeah, it's perfect. Please.
Okay.
Yeah, sorry, it won't let me connect. I don't know why.
No, that's okay. I'll do you blink. That his information is in the comment section. Well, thank you so much, Mike. I appreciate it.
Yeah, thank you. I think Alexis. Look forward to next time.
All right, bye.
Bye.
All right, guys, what did you think about, the information that you got from Mike? Let me know in the comments. You guys know that I'm constantly just trying to pour into you guys and let you know what's happening. Diana said, thank you so much for this. I've learned so much today. You are absolutely welcome. Wait, I want to have you on maybe in 2 weeks, because next week, Sunday is Father's Day, so we won't have YouTube live next Sunday. We will not have YouTube live next Sunday because it's Father's Day. But since you're commenting, I would love to have you on live so that you could tell my YouTube fam more about Kalesa Township, what you guys have going on. So I'm thinking maybe Sunday the 22nd would work. Let me know what you think. Myra said this was perfect timing. Phil said, I wish I knew all this stuff when I bought my house. I knew nothing and I got abused to the point where I lost my house. Oh man, that's so sad. I'm so sorry. Witt said, I think it's crazy how lenders have all different rates and programs. Yes, everyone is different. Anthony said, great information. Cosette said, happy Papi's Day. Yes, we're gonna love on Vic on Sunday. I'm so grateful for him as a husband and a father. Wait, let's plan it out for you to be on my live on June 22nd so that you can let my people know about Kalesa Township, what you guys have going on, the new phase, and what some move-in ready and your current incentives, because we want to give my people the best deal possible. We're gonna get off in just a few minutes, but last week was a really busy week. Oh my gosh, it was a really busy week. So what I do for my clients, especially I have a lot of relocating clients from different states. So a lot of the times they can't make, if they're buying a brand new house, they can't make their first walkthrough, their home orientation with the builder. So I do it for them, right? So this week I went ahead and I have clients moving from New York to St. Cloud, and I did their first walkthrough for them. And you already know I got my blue tape, my green tape. I'm taping everything up, making sure that, you guys are getting the best, how do I say this? I don't know. The interior. I don't know. I'm losing my train of thought. But the most quality house inside as possible. If there's any paint that needs to get done, if there's any, I pay special attention to things that are not covered under warranty, like the grass, the countertops, right? So I'm always running my fingers through all of the countertops to make sure that there's no imperfections, there's no chips or anything like that, because we want to get that taken care of prior to closing. What else happened this week? Oh my gosh, it was a really it was a long week. I have a lot of clients who are actually doing like a to be built building custom, right? So I have one of my clients who decided to buy land they're gonna buy land in Irish Acres, which Irish Acres is beautiful community in Ocala. It's a gated community, but it's very low HOA, $200 per quarter, so $800 per year. But the minimum lot size is 3/4 of an acre, and it goes all the way up to 3 acres. So we're gonna have a builder, a custom builder, build on the lot in Irish Acres. I just went under contract for my family in Citrus Springs. We've been in communication for over a year, guys, and we stayed in touch, and so they're going under contract. I have another family from up north. We just went under contract for a beautiful home in Marion Oaks. So there's just a lot of just things, great things happening. It's so funny. I made and you guys know that I always keep it real with y'all. So my question to my clients, whoever call me now, is going to be this. Is going to be, how often would you like me to stay in communication? How often would you like me to reach out to you, right? Especially if someone who's not ready for 6 months, 8 months, right? You let me know how often you want me to reach out to you, because what I think might be acceptable may not be what you think is acceptable. So I put this on my story on Instagram. So I follow a lot of different real estate agents, and somebody posted a screenshot of something, and I saw the client's name, and I was like, I can't say client, but I can't say client now, but anyways, I was like, that name looks super familiar, right? And so I went into my software, and I was like, oh wow, okay, that was that person. They ended up buying with somebody else, with another real estate agent, which is completely fine, right? So I just want to make sure that we're not dropping the ball. You let me know how often you expect us to reach out to you, just to kind of touch base. But man, we got just so much good things coming. I'm super excited. Hold on. Hi, Harold. Hi, Harold and Elizabeth. Diana said, yes, Kalesa is a possibility for us in the near future, relocating from New York. I really do like Kalesa Township. I really do love the community. I like the... You're so needy. I really like the different floor plans that they offer currently. Hopefully we should be closing on one of my clients in Kalesa this week. I have a few other clients that are currently building with Kalesa. So yeah, I think that would be a great opportunity for you guys to learn a little bit more. Hi, Alan with a Y. Giorgio said, if you have a paid home with new home contractors, except a contingency. So a lot of the times, new home builders will not accept a contingency if the house is not under contract yet, right? So you have to have your house under contract for the builder to accept a home to close contingency. Has Diana been to Kalesa yet? Diana, have you been to Kalesa yet? What do we have this upcoming week? I'm getting my car detailed, which, it needs a detail. I can't believe I have 180,000 miles on my car that's from 2018. That's a lot of miles. We drive a lot. What else do I have? Oh, I have a walkthrough with one of my clients. I have meeting some new clients. We have some closings this week. Man, I'm super blessed. I'm super appreciative of everyone. Listen, guys, we're going to be building a big team. I'm super excited to be doing that. Katrina, you guys know that I always talk about Katrina. So Katrina is actually currently my executive assistant, but she is going to be getting licensed. So she's going to become a real estate agent. So I'm going to start having her on my channel, so that you guys can see her and we start building a relationship with her, because she's absolutely amazing. She's from New York too. She has the same vibe as I do. So I'm super, super, super excited for you guys to meet Katrina. And she'll be on my videos. Phil said your mileage is a tax write-off. Yep, we do. We definitely write it off. Giorgio said, I agree. Citrus Springs have cheaper prices. They do, Giorgio. Gregorio, excuse me, I was pronouncing your name wrong. Gregorio. Yeah, they do. And honestly, okay, let me tell you, Citrus Springs, you're gonna have your Target, you have your Walmart, you have your Aldi's, you have so Publix. There's so much over there, right? I definitely think that that area is going to be like Marion Oaks, but it's still in its early phases in the sense of prices. So I think I'm going to start touring some houses over there so that you guys can see what Citrus Springs has to offer. Oh, your sister's in Citrus Springs? Diana said we went to Kalesa. No, we went to Kalesa in 2021 when the models were not even built yet. Wow. That's crazy. Guys, remember, and I cannot stress this enough, please do not call Kalesa. Please do not go to Kalesa Township. Please do not do anything without me. If you show up without me, if you're like, oh, I'm just in the area and I want to go check it out, please don't do that, because once you register with them, once you give them your information and you are not there with me and I have not registered you, I cannot be your real estate agent, guys. That's very, very important. I have way too many people do that, and it's just nothing that I can do. That's their rules. Unfortunately, I don't like it. But please don't go to Kalesa Township without me if you want me to represent you as your real estate agent. Do they anything below Haines City about 30 minutes? Not Kalesa Township, no, not in Haines City. There's a lot of builders in Haines City. So no. Anthony said, LOL, I was in Orlando and Tampa the 7th to the 25th. It was 96 degrees in Florida. I was miserable. Listen, it's hot now. It is getting hot. It's the summertime. It is the summertime. Phil said, why is that? Are you talking about Kalesa Township? I don't know. That bothers me too. But Cosette said, Katrina, yes, if you've ever called me, if you done a transaction with me, if you have if we've closed if we've helped you purchase your home, you will know who Katrina is. She's absolutely amazing. Amazing. Phil said, in general, I don't know, to be honest with you. I really, really don't. I don't know. It's frustrating. But it is what it is. There's rules that we don't like, but unfortunately we have to follow. So please, whoever is hearing this and you guys are interested in any builders, and we're just specifically talking about Kalesa Township, please do not go to the community without me. Jamal said, hey Alexis, so my wife and I are currently in New York, but we're heavily considering moving around Orlando. Do banks generally check to see if you have a job lined up after moving? Well, you would have to qualify based on what your income is, right? So let's say if you don't work from home, right? And you're still living in New York, but you want to move to Florida, the bank is going to be like, okay, how are you going to move to Florida? This is going to be your primary residence, but you work from New York, right? So you would have to have a job transfer in place. You would have to have a job offer in place, right? So you cannot get approved on a New York income if you physically have to work from New York. Now, it could be if this was going to be your second home, but a second home requires minimum 10% down and a higher interest rate. Alan said, I was asking are they building any homes below Haines City about 30 minutes? Yeah, you have, depending on where, right? You have Lake Alfred, you have Winter Haven, you have Eagle Lake, you have Dundee. So yes, but not Kalesa Township, but other builders, yes. All right, bye, Cosette. Yep, I'm about to get off too. Hold on. Phil said I wouldn't go any place without you. Thank you, Phil. I really, 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 really appreciate that. There's some people, I guess my channel is getting sent out to, I'm getting new viewers and things, but there's some people who are being extremely mean in the comments. I don't know if you guys been seeing that, but there's this one particular guy that I had to block because he kept like commenting my nails. He kept telling me that I shouldn't be dancing and all this other stuff. And then I had one person telling me I don't need to know about that you're from Staten Island or the kids or anything like that. Like, you need to get off my channel. That's what you need to do. So I've been getting a lot of hate, and I'm going to tell in every video where I'm from because I have new subscribers and my kids are a part of me. So I'm going to always tell about trolls. Exactly. So I'm trying not to give them a time of day or whatever, but is this one man who kept commenting on all my stuff and and how I should be as a woman. And I'm like, what the heck? Jamal said, I would be okay to put 20% down, but the interest rate would generally be higher. So if it was on a primary residence, right? No, the interest rate wouldn't be higher. Pamela said, if you go into the builder without you but telling you are the agent, do they have to register you as their agent? As my agent, Pam, so it depends, right? So it depends on the builder. So with Kalesa Township, I have to register you guys. Like, I have to call in and register you. If you show up and you be like, oh, well, Alexis is my real estate agent, they're gonna be like, oh, well, you need to talk to Alexis so that you can make an appointment. Block the haters. He's a hater. Haters. Yes. Your videos are very informative. Thank you. I am who I am. I always keep it 100. Like, there's no faking it. It's just not me. Some people be like, oh, you talk too much, but then you could go to another thing. I'm not boring. Like, I can't just do a tour and just be like, okay, here, hi guys, look at this island, look at this floor, and just be boring. That's just not me. All right, guys, let me get off. We've been on here for an hour, 15 minutes. I love you guys so much. Tomorrow, I think one of the videos is, we've been doing Ocala for like the past 2 months. I'm going to start incorporating other areas because I don't cover just Ocala. We cover all of Central Florida. So from Ocala down to Tampa, cover Davenport, Orlando, Claremont, Haines City, all of that, Winter Haven. So I'm going to start really just showcasing what other areas have to offer. Okay, that's hating. Seriously, Janet. Guys, in Davenport, Stanley Martin is coming. They're doing a big community. It's going to be a mixed builder. So I know it's going to be Stanley Martin. I think it was Casa Fresca, which I'm excited about. I do like their homes. Oh my gosh, did I tell you guys? Wait. Did I tell you that Richmond American Homes is building a community in Ocala? I don't have much more information than that. Like HOA, if there's any CDD, what their floor plans are. But I'm super excited about them coming to Ocala. That's when you know Ocala is growing, when all of the builders are coming into the area. So once I have that information, guys, I'm gonna let you know. Okay. For all the fathers, happy Father's Day. I hope your children, your loved ones just celebrate you guys. Okay. So yeah. All right, guys. Tomorrow's a new video. Make sure you like, comment, subscribe. I hope you guys have a great week. And no live next Sunday, but the following Sunday we will have Whit from Kalesa Township. We'll have him on our channel. Okay. All right. Bye, guys.